Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier, and this is the midweek market scan. Today, we're going to look at the big movers and shakers of the day. We're also going to look at the key markets, and right now, it's all about volatility. It feels like something really serious is about ready to happen. I'm going to sort of walk you through exactly what's happening in the Russia-Ukraine situation. We've seen major developments on every front in the last 48 hours. I don't know that we're done just yet, and I can sort of back up what I'm saying with the market movements that we're seeing today. We're starting to see a little bit of negative sentiment creep into risk assets. You're also seeing positive sentiment creep in towards what? Safe havens. The VIX is up big today. The DXY is up again about 0.5%. We're seeing a good rally out of gold, a solid rally out of gold. And then like Mark Corp just said, Bitcoin. Also, don't forget our energies. Our energies are definitely up in a big, big way. Natural gas has spiked almost 5%. There's an absolute lot going on, guys. There's a lot going on here, so we're going to have to dive in. We're going to have to cover some of the key events, though, just because it is a very important news cycle. And I'll be the first one to admit, when our economic calendar isn't forget the economic numbers. Forget them right now. This is all about politics. This is about geopolitics. This is about war. And those market drivers will drive markets directionally, absolutely directionally. Marco Vargas, good to see you. Bobby Bob, always a pleasure. Mark Corp, all right, guys. All right, let me take a deep breath and let's get to it. Today, there's a lot going here. So let's just get rapping. Let's see. Bobby Bob, morning coach Shane, kindly cover them on Bitcoin, WTI, and gold. Yeah, we've got gold and WTI loaded up for you. I'll take a look at Bitcoin as well. Everybody's talking about Bitcoin. No question we're going to 100,000. It's just a question of when. This is the chart I'm looking at right now. VIX, the volatility index. Remember, CBOE volatility index is based on those front month, those deferred month contracts, options contracts. When the premium is on those options contracts for the S&P 500 move, the VIX goes up. That's why it's called the fear index. It's called the fear index because when we see pricing action and really pressure and angst creep into the markets, the VIX goes up. So what do we have today? We got a 10% jump in the VIX. Now, we're still near very, very historic lows, and the reason why we're there is because our election uncertainty has sort of subsided. Right down there, going back to really 2023 and really back during the first Trump administration and a little bit before. We saw the VIX down there right around 9, 10, somewhere in there. Take a look at where we're at now. We had a nice big sell-off here, and now we've got the big bump. The big bump, we're back up around 1781. Always remember, if you're looking to really, I don't recommend trading the VIX because it's incredibly dangerous, but a lot of rich folks do, and the reason why is because they get big moves. You can make a fortune trading the VIX, but you need a lot of money to do it right. So I don't really cover VIX trading here. I'm in the trading room. I don't do it myself, but I'm always watching the VIX because when you see the VIX spike, it means that there's trouble afoot. You're either seeing big time selling or we're getting ready to see big time selling. Now today, 10% gain. Long-term average for the VIX, right around 21. So I always view anything beneath the 21 for the VIX as being positive for stocks and U.S. large caps, and anything above 21, it means we're starting to get elevated. Now, this spike right here, this was the sort of the craziness towards back in August. If you remember when that yen carry trade really broke down, we saw the VIX just go through the roof on a Sunday on the open, and it was absolutely huge. So to me, I'm watching for something real similar to that. If in fact we see something happen here that we may believe is going to happen. We just don't necessarily know yet, and it's all about Russia-Ukraine right now, and really the transition of power that's developing here in the United States to a Trump administration on January 20th. A lot going on there, a lot going on in the world, so we've just got to be ready for all of it. Let me see, gold. Yeah, let me see, 1 minute. 1 minute here. Yeah, I mean, I got a new process going, so I always sort of mess this up. Pardon me, 1 minute. So, yeah, we are live on YouTube right now, but right now we've got to get it live in the trading room as well. Thanks for reminding me. It's one of those things that there's so many levers to pull when you're doing this stuff, and I'm trading at the same time, so kind of just bear with the technical errors. They are what they are. Okay, any case, back. Good to see everybody back in the trading room. About 4 minutes. I'm sorry, I was on YouTube. Always remember, if I don't come on in the trading room, get on YouTube or X, and I'll be there in any case. So good to see everybody in the room. Mark Court, Bobby Bob, always a pleasure. We're just going through really the VIX and what this 10% bump in the VIX means. Let me see, Marco. I love your triple moving average crossover strategy. It's amazing. Thank you. Thank you. The big thing we need to really look at today, though, is the VIX, and I want to start with that just to get you guys up to speed inside of the trading room. What do you got there? You got about a 10% jump on the VIX, and it all has to do with this right here. U.S. closes embassy in Kyiv over potential significant air attack as tensions with Russia soar. Now, it's absolutely imperative that we understand that we're in an escalatory, really an escalatory cycle in the Russia-Ukraine situation, and a lot of it has stemmed from long-range U.S. missiles and also long-range U.K. missiles being used. I'm going to cover that in a second, but it's all pretty dangerous and ominous news. It's good to see Dragon. Devin, I'm sorry, I've just went on a four-minute tangent on exactly what we're looking at today and how to break down the VIX. I'm going to go ahead and skip that, but we are going to talk a lot about your gold, your Bitcoin, all of it. So, all right, let's get to it. The VIX, though, is the big one today, and that tells us that angst is coming into the market, and we could be in for a big bearish break at any time. This is why. U.S. closes embassy in Kyiv over potential significant air attack. Basically, right now, the markets are on high alert. U.S. is on high alert. Russia's on high alert. NATO's on high alert, and a lot of it has to do with escalation. And a lot of that escalation is coming from, well, I mean, just essentially the long-range missile use from the Ukraine into Russia, and those missiles were supplied by the United States. And also there was some that were used today by the UK. So you definitely want to be ready for this news cycle. It's absolutely imperative that we understand what can happen in the markets. I talked natural gas yesterday, and it looked like I was spot on. You're up about 5.5% today on this daily, and it's just an absolute freight train. We were looking to get a pullback yesterday, a pullback bid. We just didn't get it from 3, and you're probably not going to get it now. So we're definitely up and away here in the natural gas market. You can see that this type of thing right here, absolutely huge. We're going high. Let me see the uncleanable. Good to see it, unclean. This is something that I would really keep an eye on. Now, a lot of folks have asked me, said, Shane, where's natural gas going? And I will tell you, with this set of geopolitical market drivers, this gap right here to close close 2022 and open 2023, that gap right up there at 443, I think that's doable. If you do see more escalation, retaliation from Russia against Kyiv directly, or potentially more Ukraine missile strikes deep inside of Russia, I almost guarantee that you're going to go up and check out that 443. I would bet on it. As far as trading natural gas goes, it's a difficult market. I'm not going to lie to you. Tomorrow, we've got the EIA underground natural gas inventories. They'll send the market haywire. So you've got to get great trade location. You've got to get good trade location. What that means is it's not really good enough to buy it right now. Now, I already can hear it. Shane, if you like it going all the way up to 443, why can't I just buy it right now at 330? Because we don't know how far this thing can retrace before we go up. Right now, we're seeing really some serious bids come into the market. We're up on the week. We're up 10.5%. That's not an accident. This all has to do with Russia-Ukraine right there. Keep a close eye on this area right in here. Your spike high, that's sort of that top of that support zone, supply zone. Well, it's not support. Support's below. Supply zone is up there at about 366. I would wait for a test of 366, and then if you get a chance to buy a pullback from about 3.5, that's a pretty darn good trade. But right now, it's just really difficult to get in natural gas. How are you going to buy it? 30-minute chart, break, rotation, and there's your top side break right there. What could you do with it? You could go long right now if you want. You just got to stop yourself out probably beneath that 32.94. Or if you wanted to wait, 32.75 is definitely a better entry. Right now we're at 33.30. We still don't know how high we're going to go. Got a feeling we're going a lot higher, though, with natural gas. This will be a mover and a shaker and a very big deal to the global markets. Gold. We got to talk gold. Right now, I mean, it's all about panic. It's not a full-blown panic just yet, but it looks to me like it could turn into one relatively quickly. That VIX has me a little bit rattled today. We'll see if the stocks make a comeback towards the end of the session. But right now, we're not seeing heavy selling in U.S. large caps. It just isn't being received as a huge market mover just yet. But gold is definitely reacting. Gold and natural gas are. You can see we're up about 3.5% on the week. A lot of folks, we put out a YouTube short not too long ago about a trading strategy with a gold tutorial. I use a gold 30-minute chart to really show you how that rally-based rally strategy works. Well, I mean, some of the comments on there where I want to be short gold. There was one trader that said, Shane, I want to be short. We're going to go down to 2,300. And I said, yeah, you can't be short right now. Given this news cycle, you're asking for a lot of trouble if you're going short and holding them. Now, I'm not saying that right now is the buy of the century. and I can build a case for you to scalp to the short. I really can. That's a significant 3-week pullback. We can build a case maybe to short up here right underneath 27, but we're only looking for about $5 on that trade. So if you're going to sell 26.94s, maybe somewhere in there, stop yourself out up over 07, maybe looking for $6 or $7 on a 1-to-1 risk reward. I know I'm moving fast, but there's a lot going on. I don't know that I would be selling anything when it comes to gold. So if I was sort of going to trade this thing, I'd show you exactly how I would do it with regards to current market structure. This is a big time rally right there. There's Friday's range. Take a look at that compression. Now I'm not really a big conspiracy guy, but I also don't believe in coincidences. Somebody knew that we were going to see those long range missile attacks over the weekend. Somebody knew it. Nobody traded gold Friday. That's a complete holding pattern. That's compression. That's a doji. Then what did you get on the news? Bang, 2%, 1.9, another 0.77, another 0.70. That's a big-time rally. And believe it or not, a lot of folks that are in the inside, that are in the know, they knew something was coming over the weekend. That's one of those things where I always say it on a Friday, watch yourself going home short safe havens. If you're going home short something like a gold over a Friday, over a weekend, you could get crushed. You could get absolutely crushed. And I'm sort of smiling because those are lessons that you learn since being in the market since 2011. I remember Arab Spring, trading crude oil, and we would sit around and just wonder where the hell crude oil was going to open on a Monday. We didn't know. We sat there and we would talk all day on Friday about what do you think? What do you think? Where's it going to be? Where's it going to be? One thing was for sure, we went home net flat. And we said, we don't care where it opens. We're just going to show up Monday and we're going to trade the action. So a lot going on there. But to this gold market right here, no question about it. In my view, you want to be long. So if you want to scalp to the short, that 2,700, you can. This would be an absolutely beautiful daily market structure. The problem is I just don't think we're going to get an intermediate term top to set up. 25.36, 26.56. Do we get a pullback to 26.10? Probably not. Let's go to a 4-hour chart, see if we can get a little more current. There's your 4-hour market structure. I mean, this is pretty good stuff. There's your rally, there's your sideways, then bang. One of the things that we just put out, a video that we just put out, it's called a rally-based rally strategy. And what it is, essentially, it's a smart money concept. There's your rally, there's your base, there's your rally. So the sort of the quick and dirty of how to trade this thing, I mean, it's relatively simple. It's not hard. Right there's your base, sort of your base area. I would say, you could be a real aggressive with your base and go from your top side resistance level, maybe this spike right here, down to this spike down here. And this could give you this range, this sideway range is what we're looking for. I don't really like to do that. I like to sort of cut this down without getting too complex. I mean, we can turn on our TPO patterns, but the real problem you have with your time price offering, especially on a spot gold, is you don't really know about the volumes. You don't really know about the volume. So right here, you have sort of a point of control, which remember is just a very heavily traded price point. But you've also got a point of control that's right there inside of your rally-based rally, 26.30-ish. I like it. I like it a lot. So if you were going to use a TPO chart in that fashion, I would also use a Fibonacci overlay just for, entertainment purposes. And what do you have there? Now, I know I'm getting way out in the tall grass here, and we can make some videos on TPOs, and we can do all this sort of advanced thinking if you guys want to. For me, the rally-based rally is pretty good. Nice big trend, sideways trade. This area right in here is where we want to buy, okay? Rally, base, and then you get another rally, and then a pullback. It's a pullback bid. I love it. I could put Fibonacci's in like this all day long. 4-hour chart, spike low to a spike high. You could buy 26.41s if you're aggressive. You could do it, or you could wait for a deeper pullback, perhaps down here in the 30s. Now, if we turn on our time price offering chart, our point of control, I mean, there it is. So I'd be looking to buy 32s. The back end of my 4-hour golden zone, that's a pretty darn good bid. Now, you'll notice that we're using a lot of different indicators because we want to make sure that we don't buy the top of this market. Our trade location has to be aggressive, but it has to be good. We can't just go rushing headlong into this thing and say, I love gold. I'm gonna miss the big move. We gotta relax. It's hard for me too. We gotta relax and wait. If you wanted to buy the top end of this rally-based rally, you could do it. 26.36. I'm waiting. I'm waiting for a shot at my golden zone, and then the trade really becomes fairly simple. Let's see, this TPO, we'll turn that off. But realistically, your stop loss is going to be right down there beneath your base structure. So if in fact you were going to maybe play a true base, you'd be doing something like this. Well, you don't want to move your Fibonacci's, but something like this would be, that would sort of be your base. I don't like that. I like the bodies of the candles better. Something like that, to me, is just a little more accurate. But when we get the convergence with the Fibonacci's, then we're looking to go long. So I'm watching 2630, 265 closely. Let me see the unclinable. Yes, I do. All right. Maybe we'll get in there and make some TPO offering videos or something like that. I really like this type of a strategy, though, because you can use so many different things. It's sort of like what Marco says about the triple average or the triple moving average crossover strategy. You can do a lot with that strategy. You can incorporate RSI. I love to trade it using pullbacks. When we see a nice big move and I can throw some Fibonacci's on a range and then use my triple moving averages is really a robust entry as a support zone on a buy or a resistance zone as a sell. And as long as the crossovers are correct, it's relatively easy to trade. So I always like converging indicators. I'm a big fan of that. Silver. So what's the problem with silver, Shane? Why can't we get anything going with silver? So right now, silver's flatlining. It's off about 0.75%. There's a lot going on in the silver market that isn't necessarily happening in the gold market. A lot of people believe, they're firm believers, that these metals markets are absolutely 100% manipulated. 100% manipulated. I don't know what the heck that is. What is that? Oh, I see how that is. Let's get a different data feed. I got a position open on a different contest that I've had open for about 2 weeks. So let's go ahead and just go to Forex. So something like this, we had actually this is a good time to go back and look at this. We had sort of a trend line here. And we talked about this trend line. Let's go to a weekly chart. This is one that we drew a while back. But trend lines can be very good. Now, I know there's a lot of traders on YouTube, and they sit around and they love trend lines. They draw trend lines. There's one, I've said it a few times, there's one young lady that I follow. I watch some of her videos because I think she's a pretty sharp trader, but it's sort of more of a Hollywood type of a thing. I know a lot of you guys watch that stuff. We just try to stick to the facts here and not do anything fancy, but this is more of a Hollywood production. And essentially what she's doing is trading trend lines. She's trading triangles and trend lines, and I think all that's great because it can really work for you, but you've got to have an idea of what to do with your risk versus reward. This is a fantastic look at a trend line that absolutely gets smashed. So if you're going to trade something like a weekly trend line like this, now remember, a trend line's about 2 or 3 price points that are connected. Typically, we're at 45-degree angles, either up or down, and that's going to give us a decent chance to really predict where the market's going to go. Well, this weekly trend line was relatively straightforward for silver. Bang, there's 1 low, there's 2 lows, there's 3 lows. What happens right here? That's going to be a bid when it hits the trend line. But here's what makes traders either win or lose with trend lines. You've got to be able to shift the way you think. As soon as you go long here, when your price touches that and it doesn't work, you cut off your stop loss and you reverse your position. That's all there is to it, and that's a massive move. That's a massive move. So remember, the trend lines are great as, say, a support zone or a resistance zone, but when they break, be flexible with what you're thinking about. Be flexible. Say, you know what? I'm selling. Why? Because I got nothing to prove. The trend line didn't work. We're going to go ahead and reverse it. That's all you got to do. So something like that could be absolutely fantastic for your trading, really your repertoire. Listen, I'm not a trend line trader, but I've got them in the repertoire, and I can, if we got to trade trend lines, then we'll go ahead and we'll trade trend lines. In any case, let's go ahead and take a look at my sort of what I would be looking at for silver. A couple of ways to look at this. Number one, silver is not necessarily reflecting gold right now, right this minute. And you can see there was your sort of your 38% retracement. There's some sellers there. So right now we're working on a 3-week downtrend. You get a nice big rally and maybe some compression right up around that 31.5 level. Right now that level sort of withstood a barrage. There was a barrage. There was a lot of bidders there, but a lot of sellers stepped up and checked it. I still want to be long silver. I really do, but I don't like it as much as gold. And the reason why is because we just don't quite see the volume in this market that we do with gold. And when we think of silver, we think of more of it certainly is a precious metal. I'm not going to argue that, but we're definitely thinking of it as a conductor and all of its industrial uses as well. you still want to be bullish when things go wrong. You want to be bullish silver, but just remember, silver doesn't quite react the way that gold does, especially when you get in during times of economic strife. So I would be a little more careful with this silver market. But let's go to a daily and see if we can get a bid. Yeah, there it is. I mean, it's pretty much clean as day to me. Right there's your spike low, your swing low, and there's your swing high. My weapon of choice is the Fibonacci retracements, and there's your bid. And that's essentially, I mean, that's like a magic trick. So you've already sort of seen that scalp. I mean, it really did hit it perfect. Go ahead and pull your daily chart, run your Fibonacci's from that spike low to that spike high, and you'll see exactly what I mean. 30.82, pretty good trade. Now you're up to 30.92. So that's an interesting trade. Keep a close eye on silver, though. If you don't want to bid this right now, you could definitely be doing something down here at 30.38 or maybe 30.06, 30.67. Something to think about there, just in case you guys want to trade a little bit of silver. Now, we could go to a 4-hour chart. I'm not going to do that. Let's just wait. There's absolutely no reason with our news cycle that silver should be off, and it's off. So when we don't know what's happening, typically I like to use a little bit of caution. All right, guys, we got more news. This stuff's breaking all the time on the escalation front. This was just across the boards 2 hours ago, an hour and a half ago. Biden agrees to supply Ukraine with anti-personnel mines. This is another major step forward. Haven't really gone this route just yet. Biden administration has approved supplying Ukraine with American anti-personnel mines to bolster defenses against Russian attacks as Ukrainian front lines in the country's east have buckled. Now, this isn't necessarily going to be the biggest deal in the world. It does signal escalation. And we're expected to see one more injection of capital into the Ukraine before the Trump administration takes over. We're expecting it to come probably it's probably going to come in early December. So all signs are pointing to escalation here. I don't really think the mines are going to be that big of a deal, but look at these headlines. This is no joke. Live updates. Kiev launches U.S.-made missiles into Russia's Bryansk region. That was from yesterday. There's a policy shift. Biden administration, that does mark another policy shift. Russia-Ukraine, UK-made Storm Shadow missiles fired into Russia, reports. That's absolutely huge. That one broke just a few minutes ago. I was listening to it on the radio. I've got about 4 or 5 news sources coming in at all times. This is the number one market driver right now. Now, a lot of people believe that we've just entered World War III. I don't know that we're there yet, but cooler heads need to prevail, and it needs to happen fast because this is escalating. This is escalating. There's no way about it. That's why our VIX is up. That's why your gold's up. And also our natural gas prices are up. So Putin approves new nuclear weapons doctrine. That was from yesterday. It says 2 hours ago, but that was from yesterday. And that expanded the scope of the nuclear weapon use to anyone that was supporting long-range missile strikes into the Ukraine. So this is a pretty dire news cycle. I mean, let's be honest. This is what can happen to your markets when you get a big news cycle. Now, the last thing I'm going to say is this. Like I said, I'm not a conspiracy theorist. I'm not. But I don't believe in coincidences either. A Chinese ship was near both subsea internet cables that were mysteriously cut between NATO nations. I believe this was between Finland and Germany. Germany's defense minister said the incidents were likely to have been caused by sabotage. This connected, Finland and Sweden and China, Germany. This is a major deal. There's a lot going on right here around the world with your geopolitical news cycle. I'm going to spare you any sort of commentary because for us, we're traders. But we've got to understand that all this stuff points towards escalation, all of it. Nobody's de-escalating anything. So if we know that, we can sort of plan accordingly what to do with our trading. And we already said to be aware of the VIX first and foremost. Well, one thing that a lot of traders forget is that the U.S. dollar is one of the premier safe havens. Now, it doesn't really hold its value, meaning it's not like a gold to where you're going to buy a bar of gold and say, okay, I got gold. I'm covered. Dollar goes up, dollar goes down. But when you see something like a COVID-19, when you see black swan events, when you see global, international geopolitical strife, investors run to the dollar. Now, that's not the only reason why they've run to the dollar over the past, 3 weeks. A lot of that was after the Trump victory in the U.S. election and the Republicans really took charge. You're going to see that tone from the United States Federal Reserve, that Jay Powell saying, hey, listen, we're not necessarily going to cut rates the way that we think we're going to cut rates or we thought in September. Things are going to be different now. Tariffs, all sorts of new policies could potentially put pressure on the United States Federal Reserve to hold rates higher for longer. We'll talk about this a little bit more tomorrow. I've talked a lot about this over the last 2 weeks. But there's no denying that the U.S. dollar is functioning as a safe haven right now. It's sort of I always say it's the dog with the least fleas. Well, that really is the truth, especially when you're talking about natural gas prices spike 5%. What kind of pressure does that put on the Eurozone economy? A staggering amount of pressure, a staggering amount. So what do we have right here? We've got an uptrend in the DXY. I believe VJ put out some Elliott wave stuff earlier on the DXY. Watching this closely, a daily pullback would be fantastic from 105.65. I've got my 13-day EMA right there at 105.71. That's fantastic stuff. 71, 105.75 to 65 is probably a fantastic bid. Right this minute, though, what can we really say about it? There's your run. There's your pullback. There's another run. And now we're just sort of chopping around sideways. Now, remember, our key level, if you remember our key level coming into this week that we outlined last week, it's 2024's highs. Remember that. Remember those. Remember that key level. We talked about potentially catching bids up above that zone. And what do you have? Real tight stuff right there. There was 2024's highs. There was 2023's highs. Look where we're going. U.S. dollar's going higher. It's going much, much higher, and this geopolitical uncertainty is going to take it there. So I would be very careful, if you're trading something like, say, the Great Britain pound USD, something like this. Shouldn't be any surprise that, you're starting to see a 2-month trend that's down. Don't forget your long-term numbers. Absolutely hugely important when we're talking about Forex pairs. If I can get I've been building charts for videos and things, and we use all different colors for those. But right there, something like that, there's April of 2024's lows. What do you have right down there? Real similar, right? 2024's lows. You got another spike low right there, October of 2023. You've got an order block or a demand zone right in there. There's going to be significant bidders down here, 22.96 to 120.01. So right now, you could even say that maybe there's some bidders in here. I'm looking to sell. Something like the Great Britain pound USD. Let's just go ahead and look to sell this thing. I guess I could pull my prices up. Relatively straightforward. That's a vintage L formation, which is extremely bearish. Spike high right there, spike low. And we'll just sort of draw our uppercase L. Absolutely important. Absolutely imperative that we do that. Boom, boom. What does the L mean? It means that downtrend is still valid, and we're just sort of rotating sideways now. So if I want to trade this, I got to have good trade location. To get my good trade location, we're going to need to have a little bit of a rally here. And if we get that rally, something like that, it's fantastic. 127.68, about 100 pips north. You've got that 13-day EMA coming right down over the top, which is likely just to sort of be down in here, probably 127.50. That zone between 127.50 and 127.68 is great resistance. The only bad news is we're about 100 pips away, so we're going to have to see the dollar sort of subside, or the dollar's going to have to give back some of these gains before we can get a trade like that. Couple trade updates from yesterday, though. We went in there and got some pendulum trades done. A couple of things right here. This was a beautiful. If you missed yesterday's live stream, go back and check it out. All these things are cataloged, but you can definitely go in there, check out this area right here. We sort of made the recommendation on our pendulum strategy where we're looking for about an 80, 88.38 sell. Right there was our move. We went up. We rejected topside resistance. We entered. We got paid off relatively quickly. It did not take long for us to go down and hit our profit target at 50% of this range. If you're brand new and you don't know what the pendulum is, check out the howtotrade.com trading room. Sign up. Check out some of our strategy videos. The pendulum was a pretty good one. That one worked beautifully. Now, the other pendulum that I outlined was the Euro Great Britain pound. This one right here looks like a loser. It's not a loser. Check this out now. We go right down here. We were looking to get that bid. We wanted to bounce off of 83.32. We wanted that up to 83.36. Here's why I wouldn't qualify this one as a loser. Check out your 30-minute chart. Now, there was your big sweep lower. Okay, we swept low. So right from about here, we're looking for a rebound to go up and get us involved. Take a look at how many hours you're sitting there. You're sitting there 2 hours waiting for a 3-pip bounce? Something like that, a 5-pip bounce, 4-pip bounce. I highly recommend that if price doesn't go down there and test out, check out that that support zone, and then bounce up in at least the next 30 minutes or so, especially when the market is that tight and we're only talking about a few pips, move on to the next one. So definitely want to do that. Let me see the unclinnable. Is there a Discord I can join? Now, as of right now, we don't have a Discord. We're thinking about launching one here in the near future. There's going to be some changes here at How to Trade, relatively big changes coming your way here in a couple weeks. But we're looking right now. Just go to howtotrade.com, sign up, get in there, check out the trading room, and all these strategies and materials are there for you, along with a ton of educational videos. Go there, follow me, send me a private message, and we'll talk some trading. Always look forward to talk trading with as many of you traders as I possibly can. All right, last question. This one's for Bobby Bob. He wants U.S. oil. Let's go right to this gas. You see our natural gas play right in here. That would be probably my bid, 30 to 327-ish. That would be a nice scalp. What about oil? Well, oil is doing what today? It's down. Now, we had an EIA inventories number come out. I'm not necessarily sure. I haven't even looked at what it was today, so I'll put something out. I'll send a tweet out on X, either on How to Trade on X, or you can check out my own at Shane V Trader on X. But right here, this type of movement, definitely bearish, no question about it. Do I want to buy or sell WTI right now? It's a hard market. It's a hard market to put our finger on. Spike low there, spike high. If you want to scalp today, I'll give you a pretty good scalping entry. I don't really want to hold position longs, but I do have to respect the long side of this market. Those geopolitical issues are no lie. There's Monday's move, 3%. Why? Because the bomb started flying. That's just the way that it is. With WTI crude, anything that suggests world war, geopolitical uncertainty, terrorist activity, all of it drives crude oil prices higher immediately. Now you're starting to get the pullback. I'm still bearish, but this escalation has changed things. I'm bearish going into a new Trump administration. I believe we're going to hit our 64.50 number, which is our macro bid. I'm not going to cover that level again. I've done it pretty much every day. But this pullback right here, 68.66, that's probably going to be a pretty good scalp. So in order really to execute this thing, let's go right here to the trade. We gotta switch data providers here. Let's see. Now we won't outline the trade. Let's just go with a buy limit. A buy limit bid probably from right down here, 68.66, 68, maybe 68.70. You could probably get away with that, and we're almost right there. Interesting trade. I think you could probably grab that for 10, 15, 20 ticks. Just be careful. If, in fact, this starts to fall away, 67.87 is better. Back into the golden zone. If you wanted to sell right now, I don't use a 4-hour chart on crude oil. Always looking at the U.S. session. I would be very careful with what I did. Right there's your news bar, 8:30 a.m. my time, 10:30 a.m. Eastern. You could probably make a few bucks right there selling 68.97s, 96s, but that's going to be more of a 5-tick or an 8-tick type of a play. I would much rather bid this right here, but take a look at our level, 66. We already went to an intraday low of 72, and now we've got sort of the bounce back there. I would be more than happy to bid from down here, just intraday scalp. You could scalp from up here as well, but I would, with price action this close to really our key number, I'd be looking probably to step up there from maybe 67 or 68, bid the level and see what happens. My profit target probably be back up in the center of this doji, something like 84, 85. I think you could easily get that. Just be careful. If you get compression and that daily 38% breaks, it means our next port of call is going to be 50%, which is going to be down there at 68 and a quarter. A lot going on there. All right, everybody. Absolutely. Glad to have you, Inclinable. Sorry, my apologies once again for the confusion here in the trading room. Remember, if one of our times come around and we're not live streaming in the room, it's because I forgot. So be sure to weigh in on the live chat, and I'll go ahead and get that link up for you right away. If not, you can always find us on the How to Trade YouTube channel. You can also find us at How to Trade on X. All those platforms we're streaming live. And I believe LinkedIn will be making a comeback here, and we'll probably be expanding to Rumble here in the near future as well. All right, everybody. I want to thank you for joining me today. The number one thing I will say is, I started with Bitcoin, Bobby Bob. All right, we'll do Bitcoin real quick, and then we'll go ahead and sign off. All right, let's have a look at Bitcoin. Bitcoin right here is, just easy. Yeah, crazy days. Absolutely, Mark Corp. I think I put this chart out somewhere yesterday, and there's no question about what's happening here. Or I put this out earlier today. When a market's trending, When a market is trending and it's making all-time highs like you're seeing Bitcoin do right now, there's no resistance levels up there. The only resistance levels up there are big round numbers. In my view, the next three up are 95,000, 97.5, and 100,000. I put this out earlier on X, I think. In any case, 95,000 right there. The high was what? 94,942, and now you've got a bit of a pullback here. So there are scalpers there that are scalping derivative contracts right in front of 95. There's also profit taking at these key levels. What that does is sort of puts a lid on the market. In my view, the next level up for debate is going to be 97.5, and then we're going to 100. I can't really see past 100 right now, but I want to be long. Do I want to be long right now from market at 94? And not with 95 already in play. You sort of risk. You really do risk buying the top of this thing. And, we all know that Bitcoin can go down just as fast as it can go up. But this type of strategy right here and this type of formation really gives you a good look at what I would call a very clear-cut daily bullish triangle. This would be an ascending triangle, something like this. So right there would be your uptrend. And then we go right into your triangle here. And once again, we're just doing this on the fly. Be sure that if you're going to draw these things, you draw them as exact as possible. I'm just sort of doing this quickly to show you how the thing would be constructed. Remember, a bullish triangle is after an uptrend. Then you're going to have a period of sideways trade, and then you're going to have two things connected on the top. That's going to be your trend line, and at least two on the bottom. That's going to be your southern trend line. Those things converge, and that's what we call a squeeze. So right there, the market squeezes, and then it finally breaks, and you're in pretty good shape. Now, the one thing about triangles is a lot of people try to draw them perfect. Remember, they're just guidelines. I mean, realistically, there's a lot of variance in here. Just sort of encapsulate a majority of the trade, and then there's your break. So if you were trading this bullish triangle right now, you would be long probably right in here, right on this breakout. Probably a breakout right up in there, probably above the previous day's high, something like that. Right there, you'd be long. Stop loss is probably going to be down in here. I don't know that I would put it beneath the entire trend. I don't think you need to do that, but maybe that first sideways bar, that's a pretty good area that'll give you an out right down there at 84. So if you were looking to make this trade and get at least a 1-to-1 risk versus reward, you'd be right in here at 92, somewhere in there. 93 would be your buy, something like that. And then you're going to risk 84, so that you got to get at least 9,000 out of this. So if you're going to do that, you need to be getting like 103,000. I don't know. I think that I would wait. If you wanted to wait for a pullback, we put a trade idea out like this a while ago. If you want to wait for a pullback down in there right around 90, I don't really think you can go wrong doing that. Let's go to a weekly chart. I do believe that, this 95 area is just going to be a hiccup. I really do. So right there was sort of your uptrend. There's your 3-week break. What you would love to do right now is get one of these levels, one of these 95, 97.5, or 100,000 to set up a short-term resistance, and then you'd love to look to buy a pullback. But I'm not going to sit here and reinvent the wheel and try to call the top of this thing. I don't think Bitcoin has a top. Nobody knows what it is. Nobody knows what it's worth. Very few of us really know what it is and what it means to the world. I've heard guys, men and women analysts, ladies and gentlemen, that have said we're going to 250,000 or 1 million. I don't know. I don't know what it's worth. I really don't. I do got a pretty good idea, though, that we're going to hit 100,000 just because we've come so far. I think it was Paul Tudor Jones said that big round numbers make for great targets. 95, we just hit 95. Sellers stepped in, profit taking came in, a little bit of a short-term pullback. 97.5 is the next one up, and then 100. I don't see anything that leads me to believe that Bitcoin's going to reverse, barring a major hacking event or prosecutions. But Gary Gensler's out at the SEC. The Trump administration is over the top pro-crypto. They've already said it on several occasions. We're pro-Bitcoin. We're pro-crypto. This is what we want to do. What does that mean for prices? It means they're going up. All right, everybody, I'm going to put a trade idea out a little bit later here in the trading room, so be sure to cruise by. If this is your first time watching, check out our market analytics thread. Connor just has one out a little bit earlier. Mark Corp, these are crazy days. Thank you, Marco. Just registered. Let me see, the unclaimbable. Where do you make your trade, on TradingView or somewhere else? I use TradingView for my analytics. I do all my analysis on TradingView because most people are familiar with TradingView. Now, I know we have a lot of clients and a lot of folks in the room that trade with MT4 and MT5. Our partner broker, Switch Markets, definitely supports those platforms. I do all my analytics on TradingView, and then as far as my trading accounts go, I specialize in futures. I have several Forex accounts as well, but I'm a futures specialist, so I'm looking to make those trades on my futures account, and I'm not going to plug them here, but it's probably I have three. Well, I used to have four, but I closed one of them. I have three accounts through the biggest providers in the United States. That's what I have. All right, guys, I'm going to go ahead and kick off right now. If you didn't take anything else away from this live stream, watch the news right now and think good thoughts, say a prayer, because this doesn't look good. This is escalation. Understand what you're going to do with your trading in the event that we see the unprecedented. I know I'm watching the news. That's for sure. All right, everybody. Fantastic session. Thank you. Thanks for the folks that just swung by and checked out the stream. My apologies once again to the trading room. There's so many levers to push now with this multi-platform strategy or streaming that I just sometimes forget one, but I'll do better next time. I'll get a list in front of me. All right, everybody, have a great day. Good to see you, Dibble. Good to see you, Bobby Bob. You're welcome. All right, everybody, trade the action well, and we'll talk soon. See you.